For years, the insurance industry has sang the same tune. Insurance penetration remains low. But why does this song never seem to change? Is it because innovation is failing to meet customer needs, or is there a skills gap within the sector itself? And most importantly, when will Uganda finally move beyond the 1% penetration mark? Tonight on Business Perspective, we ask the tough questions. Is the industry truly committed to changing the narrative, or will the same song continue to play? Welcome. This is Business Perspective. I am Isabella Tugume. Uganda is home to one of the youngest populations in the world, a nation in motion. From the bustling trading lanes of Kampala to the fertile farmlands that feed the region, economic activity here is constant, energetic, and growing. Trade, agriculture, manufacturing. These are the engines driving Uganda's economy forward. However, behind this growth lies a striking gap. Insurance penetration in Uganda remains below 1%, a figure that raises an important question as the economy expands. Why does protection lag behind? This is Kamwacha Market on a Friday morning. The energy here is undeniable. Traders moving merchandise, customers negotiating prices, and commerce happening in real time. But ask these traders about insurance, and the conversation shifts. Awareness is low, protection is rare, and the issue isn't isolated to trade alone.
Government yaffe niyetaaga okutereezaamu ku buli kimu. Wakati insurance nga nze Rastafari nja gitegeera. Ne wali atagitegeera. Nga wuli akagambo ki? Insurance. Ogwo gwali badde musomo mulamba. Nga abantu wakimuteekawoko ku musomo nga ku zi TV zaffe zino ze tusinga okulaba zisanyuka TV. Ne muteekawo ka program nga ko kakutegeeza abantu. Big up nga kakutegeeza abantu insurance etegeeza ki? Kuba insurance ya bintu etegeeza ebintu bingi. Waliwo life insurance, waliwo kwegamba bingi etc.
Let's turn to agriculture, the backbone of Uganda's economy. Despite efforts by agricultural insurance consortiums to extend coverage, uptake remains limited, held back by a number of barriers on ground.
First of all, where is the insurance? Before we even think of the farmers understanding the insurance. The last I checked is that the insurance, there was this consortium of government and insurance companies, agri-consortium. I will tell you, it has not worked. And I can tell you this from a perspective. Insurance in general has not been a very good concept in Uganda. Even with other insurance policies, it's just, getting better and better. So for agriculture in particular, it is highly risky, and I think the banks partly are right, especially the commercial banks, not to give access to finance with a lot of risk. But the insurance is not working out. In my perspective, it's not working out. I think when it comes to farmers that would apply for insurance, and when it comes to compensation, that is where the hiccup is. So as long as farmers are not compensated, they're not going to have appetite to take on this insurance policy. So its practicability and being able to be accessible to farmers is still lacking. The government probably needs to step in and either subsidize or create a certain fund that can probably be given to the bank as surety or as guarantee, so that the farmers are able to access this kind of services. But on the other hand, there's also a big role to play at the farmer level. I know that most banks find the farmers unbankable. And also we know that the farmers sometimes are not able to prove to the banks that they're able to pay back. So insurance could be a good one. But I think we need to go back on the drawing board, have the insurance companies on board together with us, and see how we can create synergies and make sure that we have this in place. But as it is now, if the consortium didn't work so well, then I don't know how insurance companies can work very well without the consortium.
It doesn't stop there. Even in manufacturing, a sector growing signs of improved uptake, insurance penetration still trails far behind global benchmarks.
We call it unsung hero. And the only challenge why you have insurance as an unsung hero, you don't know the reason why you're insuring something really until you make that an inevitable loss. That's when you realize that you should have actually insured your products. The challenge we have with the insurance sector has been the numbers. So you can end up blaming them for a lot of things. Maybe you can blame us all for not having communicated, sensitized, and repeatedly sensitized the population and the economy at large to know the advantages of insurance. Because remember, insurance works in a very interesting system. The more the numbers, the less the premium. So at the end of the day, we need all of us to get insured so that the premiums go low. And as and when the inevitable happens, you are able to be compensated. But until then, the premiums stay high, the people who are getting insured are few, and yes, the burden stays. The one thing that we need to start doing as a nation is there are some things that need to be regulated. There are some insurance aspects that need to be regulated. Somehow in our country, we do think there are some people who should be responsible for things and others shouldn't be responsible for things. And we are saying no. For example, is it not in order that everyone who exports should have an export guarantee scheme so that you don't come and disturb us when something goes wrong, but rather you disturb them? Is it also not in order that every single Ugandan gets to pay some health insurance? Must the government bear the whole entire burden? Or must manufacturers bear the burden always? Think about some of these things are critical that we as a nation begin to think. Maybe it would be clever that every Ugandan pays a small insurance fee for health, that every exporter pays some small fee, then we bring those burdens down, that maybe even at manufacturer level, that every single person in the manufacturing industry pays a small fee for things like fire, like this, so that when it happens, God forbid it happens, you don't have to serve a government. Those are things that we should run away from in this modern day.
3 sectors, 3 stories, 1 common thread. Insurance awareness and penetration remain a work in progress across Uganda's economy. If customers still do not understand products being offered, where does the problem lie? Is it in the products themselves, the communication, or the professionalism within the sector? After the break, we look at the missing link. Welcome back from the break. You're still watching NBS's Business Perspective. We value your feedback. Reach out to us across all socials or using the hashtag NBS Business. Now, today's customer is more informed than ever. With information available at the click of a button, expectations are changing really fast. In the digital era, understanding and keeping pace with clients is crucial. Let us explore this. Uganda's insurance industry is growing steadily. Gross written premiums have risen from less than 1 trillion Ugandan shillings a decade ago to well over 1.8 trillion today. And yet, insurance penetration remains below 1% of the GDP, far below global average of nearly 7% and the African average of 3%. For an industry seeking to expand its reach, products alone would not be enough. Growth depends on people, professionals designing policies, assessing risks, settling claims, and driving innovation. So who is preparing the next generation of insurance professionals, and are they equipped for a future increasingly shaped by technology, data, and emerging risks? To answer that, we sat down with Saul Serembe, the CEO of the Insurance Training College of Uganda. In as much as the insurance penetration in Uganda remains low, the sector continues to grow. Sure. And as it grows, it means that it requires the right people with the right skills. So sure. We want to find out from you, do you believe the industry is producing enough talent to support its future ambition?
When we talk about the industry, the insurance sector, I think we've moved. We may not be where we want to be, but there have been efforts to ensure that we move in the right direction. When you look at the setup of the Insurance Training College specifically, our mandate is to train, to ensure that we churn out the right professionals, competent for the sector, not just in Uganda, but in the region as well. One of those things that I usually talk about when we are talking about professionalism is trust. And if an industry is to grow, we need to build that trust. And if we are to build trust, we must have the right professionals in this industry. So when you look at the new things coming up, I think our industry has been disrupted so much. You're hearing about the technology coming through, you're hearing about COVID coming in, we have the AI now getting into the... So there are lots of disruptions. That means the professional must move ahead of these. So I can't say that we're in the right direction, but we are not yet where we should be as far as the right professionals are in this industry.
As the industry evolves, technical competence alone is no longer enough. A modern insurance professional must combine expertise with innovation, digital literacy, and customer understanding. What or how does a world-class professional insurance person look like in this year, 2026? What qualities must they possess?
Perfect. I want to take you a little back. When we were training people in insurance 10 years ago, we were looking at competence skills, competence and skills to enable them, technical skills to enable them do the work. And you look at most of the programs that we are running, the focus was on underwriting, risk assessment, marketing, and then that was the thing. Today, everything has changed. You realize that now a professional should be agile. Competence is not enough. A professional should be client-centric, someone who can handle the client. Because as I told you, as we are building the trust, we must be able to understand the clients that we are dealing with. And the mechanics of the clients are changing every now and then. The Gen Zs are coming up. What they want is too much, compared to what we had previously.
Global insurers are investing billions in artificial intelligence, predictive analytics, and cyber risk management. The future of insurance is increasingly data-driven, but how is Uganda's workforce ready for that future? In your view, I want to ask, what separates, for lack of a better word, mature insurance markets from developing markets like Uganda?
I want to look at it from two angles. One from the market side, but also from the side of the professionals. And I want to compare markets like South Africa and Uganda, or UK and Uganda. These are very mature markets. And when you look at these markets, the level of trust in the insurance business has been developed to a very high level. What is happening in these markets? Insurance is not an option. When someone is looking at the things they are supposed to spend on, insurance comes among the top priorities. So in such markets, the efforts are not about selling insurance to people, but rather creating a diversity of products for the different categories that keep coming up. Now, in our markets, we are still struggling with building trust. As we are talking about insurance, you must also ensure that you build trust for people to understand that they need insurance. It's a necessity, but you must dig deeper to convince them that insurance is a necessity for them. So that is one of those things that we must look at. But when you look at the other markets, they are also awash with all sorts of products. When you go to UK, South Africa, you realize that there are products that you cannot even think about. Well, in Uganda here, we've started the dog insurance, I think by Swiko. But you go there, you can insure your arm, you can insure your legs, you can insure your eyes, there is a product for everything. They have been able to come up with a product that suits every need of the client. Now, here, we are still moving at a slower pace.
Insurance penetration in Uganda markets often exceeds 10% in the GDP. In countries such as the United Kingdom and South Africa, insurance forms are a central pillar of economic resilience and wealth protection. What separates those mature markets from developing markets like Uganda?
As a trainer, I think the responsibility is on us, not the market. We must move ahead of the market to ensure that as the market dynamics are changing, we've also changed the way we teach, such that as those other things are coming up, the market is ready. And we've tried. When you look at the trainings that we offer now, we've done a lot of cyber risk management for the markets. We are now getting into AI.
The risks businesses face today are dramatically different from those a decade ago. Climate change, cyber attacks, digital fraud, and evolving health threats are reshaping the industry. So, how pertinent or how important is continuous professional development in an industry where risks are also constantly evolving?
I think one of those things that are very dynamic are risks. A risk keeps changing and it is very dynamic. The risks that we are looking at 10 years ago, 5 years ago are totally different now. Today we are talking about cyber. Cyber is more prevalent compared to how it was 10 years ago. We are talking about pandemic. It has shown us that it can disrupt the market. That was not the case way back. We are talking about Takaful. 15 years ago, we never thought we would be having Islamic insurance as another angle of insurance. So, continuous development programs are more so the ones that we are running, assist the members of the industry to acquire new skills. And in acquiring new skills, they are kept updated with the latest trends.
Industry experts agree that increasing insurance penetration will require more awareness campaigns. It will depend and will demand skilled professionals capable of designing products that meet the realities of Ugandan consumers and businesses. So, if Uganda is to achieve higher insurance penetration over the next decade, what role will a professional education play? This is where your institution comes into play.
And you know, insurance is about trust. I've been talking to people in the past few weeks about how trust can build business resilience, right from the banking sector and insurance. But when you look at our sector, insurance, it is even more important than any other sector because your business is heavily hinged on how people perceive your service. Insurance, unlike other businesses, other products, it is not tangible. It's a promise. In case this happens, I'm there for you. Now, in order for you to convince this person, there must be a lot of trust. Now, how do we build this trust? Education institutions are very central in building this trust from two angles. One, do you have the right people? Because another question will come up. How did we lose this trust? Maybe there were people who were not professional, who said wrong things to people, who were not honest with people. So, as an educationist, our role is to ensure that we train people in order for them to appreciate the business they are in.
Across East Africa, competition for specialist insurance talent is intensifying. Markets are racing to build expertise in actual science, digital underwriting, and risk analytics. Globally, we have noticed insurers are investing heavily in digital capabilities as well as specialized talent. So, with regards to Uganda, are we moving fast enough to remain competitive in the regional and global insurance landscape?
I wouldn't say we are very fast, but we are steady. When you look at the pace that we are taking, we are steady. And I think the steps that we've taken are promising. When you look at the investments that are being taken in the industry, you realize that we are mindful of the client. Today, you buy your third party online. You don't have to go anywhere. So very soon, the stickers are out of business. You see? Why? Because we realize that the client will not be driving around just to find a spot where to buy a sticker. When you go to Marine, now Marine can be bought online. And there are lots of other products that we are seeing companies putting on online platforms. We are seeing a lot of innovations coming up. And all these innovations are putting the client at the center.
As we look beyond today's challenges, one question remains. What kind of insurance industry should Uganda aspire to build by 2035? The world has become a global village. Customers can compare products, experiences, and services standards from everywhere. If insurers fail to deliver value and build trust, penetration rates might remain stagnant. So what are insurance companies doing differently to win back confidence and grow the market? You're still watching NBS's Business Perspective. Download the Afro Mobile application for this and so much more premium content. Now, the traditional way of selling insurance is rapidly becoming outdated. In some developed markets, people can insure everything from a prized pet to a single body part. Ugandans are watching these trends unfold. The question then is the local industry innovating fast enough to meet tomorrow's customer? Talent is only one part of the equation. The other is opportunity, where future growth will come from and how insurers are positioning themselves to capture it. From that conversation, we turn to industry leader John Katende. One of the things that stands out is, despite years of economic growth, Uganda's insurance penetration remains really low. So I want to find out from you, what do you believe are the biggest untapped opportunities within the insurance sector and for insurance as well today?
I would say one of the key aspects that we're looking at is creating more and more awareness of insurance, and such that it makes it more convenient. Because there's the notion that nobody wakes up to go and buy insurance. Insurance is sold. You have to actually find people and plug in. Yes. Okay. Outside your business ecosystem, you know, by somebody not being aware. So that's a risk, and the insurance products that are looking at it. There's this whole debate around climate. Climate risks are also very, very big. And so you've got parametric insurance that looks into weather-associated or climate-related risks. Businesses are also looking to protect employees, because what people call today the bottom of the pyramid, or muntu wawansi. So we're looking at going into uninsured spaces. Jubilee, we have brought on board a platform called the J-Force. So J-Force enables all our intermediaries, our agents, our brokers, our bank partners.
For many consumers, insurance still feels complicated. Industry leaders acknowledge that complexity remains one of the biggest barriers to adoption. During the initial part of our conversation, you pointed out that insurance products are viewed as complex, and this is a notion out there, a product that you must sell and one will not seek willingly. So how can the industry simplify its offerings without compromising on the value?
Through partnerships, by plugging into organizations that have already, built KYC and built trust into their day-to-day consumers. For example, I'll give you an example: the banks, the telecoms. Okay, people are transacting every day through the platforms.
What global insurance innovations do you believe Uganda should aggressively adopt?
Parametric insurance, that's weather indexed insurance, because majority of our Ugandans are in the agriculture sector, And these are the people being affected heavily by weather and climate change. Now, if 80% of the population is in agriculture and we protect their livelihood through parametric insurance, then it becomes much easier to add other benefits to that insurance. Because, for example, when you insure against a flood, yeah, what usually follows when an area floods? Malaria, yeah? So malaria should be covered together with weather-based insurance.
What strategic decisions are insurers making today that will determine who succeeds over the next decade?
The strategic decisions that need to be made for me are mainly on the distribution. Whoever controls the distribution or the last mile to the millions of customers out there and creates the products that are able to reach them and speak to them directly will carry the day at the end of it all.
And finally, for an insurance investor that is watching, kindly make an investment case today.
So Uganda's insurance environment is very nascent, very big opportunity. To date, we have under 500,000 insured Ugandans covered under some form of insurance, and these are mainly employer-backed insurance covers. Out of 45, 46 million Ugandans, so the opportunity in the Ugandan insurance space is great and immense. We invite the players to come in, it's well regulated.
We take yet again another short break. When we return, there is much more on the future of insurance and the opportunities that lie ahead. Stay tuned. You're still tuned into Business Perspective. Once again, I am Isabella Tugume. Now, despite the challenges, the industry numbers tell an interesting story. Gross written premiums are growing and claim payments are on the rise. What is driving the growth, and does it signal a brighter future for the sector? Let's find out. From opportunity to execution, the next question is simple. How is industry performance shaping up the numbers? From that perspective, we spoke to the leadership of Swico, one of Uganda's longest-standing non-life insurance companies. The non-life segment remains the backbone of Uganda's insurance market, accounting for a significant share of industry premiums and providing protection to businesses, households, and public institutions. Recent premium growth has been encouraging, but what lies beneath those numbers? How should we interpret this growth beyond the numbers?
Great. Thank you so much, Isabella, for having me. The easiest way of interpreting the growth we are seeing within the insurance ecosystem is largely twofold. First is more trust from the market. We've seen a lot of growth largely on the micro insurance segment, and I think that speaks to the ability for players to then serve the unserved segment. We anticipate a lot more growth from that sector as well. The other way of looking at it is that from a financial inclusion perspective, I think they paid back in claims. And this is what the broader public does not know. What does that mean for us? For us to actually continue the growth that we are seeing, which is in excess of about 10, 11%. As individuals, we probably care about our lives. You're talking 50,000 to 60,000 shillings annually.
Seen products like fire, motor, personal accidents, and liability continue to dominate non-life insurance. Why are these covers so essential today?
Bank assurance. So the fact that banks over the past couple of years have entered the insurance space by way of the Bank Assurance Act, this has in effect made it easier to see the sort of projection we are seeing on fire, motor, name it. Just to put things into perspective, if you're borrowing from a particular bank at this point in time, chances are that you will be required to insure whatever asset you're pledging to the bank. And this is where insurance then comes in to offer the auxiliary support to the bank as a risk mitigation measure. We now have in excess of about maybe 20 banks that have bank assurance licenses, and those have also really added a layer of growth for us in some ways.
Okay. Now, industry expenses and commissions are also increasing. What challenge does this create for insurers?
It simply means we may not survive as long as we want to survive, right? You have a claims ratio, and to put things into perspective, a claims ratio is the amount of money an insurance company spends on claims. So if we collect 100 shillings, our current claims ratio is about 56%, give or take. That's more than half, right? Management expenses are the expenses we incur to be able to deliver this service. So salaries, taxes, name it, all of these things. The current management expense ratio hovers at about 30 to 40%, depending on the type of business you're in. What that means is that the shareholders are left with only about 15 to 20%, right? So the more management expenses increase, the harder it will be for shareholders to realize a rate of return on their investment. And for most of these insurers, really, they are privately owned. We don't have a fully fledged government-owned insurer, so to speak. So we need to figure out ways of innovatively tackling these management expenses so that we can deliver a decent rate of return to our shareholders.
Okay.
Yeah.
Medical insurance continues to grow, however, profitability remains a bit of a concern. Why are we having this type of critical conversation?
I think fraud is a big problem within the medical insurance space. And because of the challenges around fraud, underwriters then struggle to appropriately price or reprice medical insurance policies. For context, we have about 400,000 medical insurance policies. And all of these medical insurance policies are really by virtue of employment. If you have an employment contract from your employer, and they have the budget and they are kind enough to extend medical insurance to you, you fall in that bucket of the 400,000, which leaves another, 36 million plus Ugandans that don't have medical insurance. So the problem we are seeing is that because most employees have a very high sense of entitlement to this benefit, quote unquote, we also see a bit of misuse at a hospital level. So even when you don't really have anything fundamentally straining you health-wise, because you're free on a random Saturday, you feel the need to visit the nearest hospital to swipe your card. But as you swipe that card, there's a cost attached on the back end. The insurer is paying, be it a doctor's consultation fee or anything of the sort. So for as long as that card is swiped, somebody has to bear that cost. But I think where we are headed in terms of utilizing AI as part of the discussion, it should at least support the existing players, try and mitigate that risk in some ways.
All right. Now, SMEs are often described as the backbone of Uganda's economy, and yet in our context, many of them remain uninsured. In your opinion, what could be the biggest barrier?
There's a huge sensitization gap. I don't want to say the responsibility largely falls squarely with insurers. I think government, through our association, through our relevant line ministry, has an uphill battle to do, right? Majority of the 1 trillion that is currently being underwritten by the existing general insurance players is coming from corporate business. Corporate business means, the large entities, right? That pretty much have no fallback position. They have no choice but to insure because it's big business. SMEs, on the other hand, I think have options that are informal in many ways, right? And it's our responsibility, plus a few other stakeholders that I've mentioned, to come up with appropriate solutions. And on that note, SWICO really is in advanced stages of piloting an SME relevant product that will cover a whole range of benefits for these SMEs, from the mandatory workman compensation policies to motor and name it, a whole range of policies. that should be coming along in the coming weeks.
All right. So, on a lighter note, Swico recently won a Non-Life Innovation Award for dog insurance.
I know.
What does that recognition say about where the industry is headed, and what does it mean to you?
Think of it from an inclusion perspective, right? We have high net worth clients out there who spend at a bare minimum $300, $500 in terms of expenses for their pets. From where I come from as a finance person, that's already insurable interest, right? That amount of money is more than what a few families out there spend on education, on food, name it. And so because of that insurable